Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. For those of you new to the channel, do me a favor, click that subscribe button down below and the bell icon so you get all the updates when we put new trades on. So let's go ahead and dive right in. We had a day yesterday where we looked like we were going to get a bit of a reversal, and then it rallied right back up in the equity markets. So I'm going to start with the S&P, and in the S&P we had a potential short lined up, and that short, price came into the level. Let me move it to a smaller time period so we can see what happened with price. We rallied up into the level and got a decent little move out of it, and the decent move out of it was an opportunity for somebody to pull a little profit off the table. So depending on how aggressive you are and how quickly you manage your positions, you may have taken a little bit of profit off the table, but in all reality, it didn't get a very strong move out. I mean, it did technically come to an opposing level, but didn't get a very strong move out of there. And then we were able to kind of punch right through there later in the day. So now we're back near our all-time high, and we're sitting at what could be a potential long opportunity out of this breakout. Now, my only fear with this long opportunity out of the breakout is the reversal off of this all-time high. So let's just take a look at what happens later in the day. I'm going to actually hold off just a bit on it because I don't have the room to run that I would normally like to have for a clear breakout. Breakouts are not something to be afraid of so long as you follow the rules. You have to follow the rules of a breakout in order for them to be, much more effective. And when we think about the rules of breakouts, the most important rule in a breakout in my mind is it's got to have touched the area more than once before I get that breakout, right? Here's a pretty good example of it where we had a touch, came right there again, right there again, right there again, boom, breakout, nice strong rally up. And that's really what we're looking to do, is to find that setup. And right now, technically, you've got an area here that was touched twice on the hourly. So you could do a breakout above here, but frankly, I'd rather see a little bit more of a pullback, and then I would feel more comfortable with it. Because of this high here, coming right off this all-time high, we may not get the run that I like to see out of this breakout. Nasdaq trade looked very similar to the S&P, and we are back to right near the all-time high. This one actually bounced off of that high and then fell down from that area. So we've rallied back up, and that's why shorting anywhere near the all-time highs is much more risk. But the breakout again scares me because I've got this little tiny area in here where we have this one candlestick with that high upper wick. That one candlestick with a high upper wick, think about what happened in there. Price went up, came back down, moved over, up, down. So let's look at that in a smaller time period. When I go to the smaller time period, I'm able to see that we did have a little bit of basing in here before a very strong drop. So if you are more aggressive, you may get a little bit of a reversal here. I'm not as comfortable with it. But we may get a bit of a reversal in through here. This is a little bit of a sideways price action before, after a pivot high, which typically serves for a pretty decent reversal opportunity. But this is why I can't do the breakout long, because remember, the rule on breakouts is not only do I need an area that's been touched a couple of times, I need some room to roam. And with this area up here, it takes my room to roam and really shrinks it. So I'm going to hold off for just a little bit on this NASDAQ trade as well. As far as crude oil, if you jumped in on the long and moved your stop up to where we talked about the stop yesterday, then you are still in the position, and there's no reason for you to necessarily be out. If you missed the trade, it looks like you may get another opportunity for a breakout long somewhere up above 76. So just keep an eye on that. going forward. As far as a reversal trade, I've got some reversals way down in here, but price has just not made it back into any of those reversals. So the breakout has been the way to go. In gold was a huge run yesterday, an absolutely huge run higher yesterday, as we had a lot of strength kind of come into the metals on that hourly chart, but really only for 2 hours. So what does that do for us? Puts us right back into our bigger picture sideways price action. We still have some areas of potential selling up above us, but that sideways price action has been pretty strong and pretty steady. So, what does that tell me? It tells me that I've got not a whole lot out there that's screaming for me to look into in the equities markets. So let's go to the bonds. So in the bonds, we have a potential reversal at this area here. We've come into it twice. We got a nice little move out of it the first time we touched it for a nice little trade. The second time, we've not come back into the level yet, which is why it's in a dashed line scenario. There could be some areas below us, but price, there's nothing really to stop price from falling from this point. In the Aussie, price has kind of continued its fairly lengthy move down off of this area up here. We still have that as a potential reversal. There could be a decent opportunity if you get another reversal there, but when you have a strong move, you just don't get back to your reversals, and so I need to wait for strong breakout candidates, which I haven't had that either in the Aussie. In the Euro, nice little move off of our fair price value area. It went from one to the other, and here was the opposing area. So that offered a little 2-to-1 reward to risk before then coming back up. So now I got to remove that level. So that one was a nice little tiny trade, day trade. Worked for a few points yesterday. For those of you able to nab it, that was a nice little one. And then now it's popped back up through that area, and so we would have to look for the next available opportunity. Well, when I look at this now, I've put in a lower swing low and lower swing highs. If we get a candlestick with a higher high, then I would actually be okay with a buy on a higher high candlestick, so long as I stay above this kind of rising trend line. We are coming to this area here, which is where we had our last big run up. So this is a good candle to candle trading style opportunity in through here, if indeed we get one in the next couple of hours. So hopefully I can get this out so that you can see it in that time. Canadian dollar, no real change, and I didn't expect much real change. That's why we have our reversal trade down here, breakout trade up above us. Great British Pound, Japanese Yen. So our Japanese Yen, yesterday we had entered the trade while I was doing the recording, the trade med entry, and had a decent little run down, popped back up, scared you a little bit, came back down, popped back up again, scared you again, and has come back down. Still hasn't hit the stop loss. At this point, I think it's a good idea to take the stop and move it down to at least this area here, above this area here, just to lock in some profits, a little bit of profit at the very least, and take the risk off the table since we've come into this level so many times. And so now what I need to do is remove this, remove these lines, because it's no longer a valid trade. But I think that this thing could continue to drop further, and as we set a new swing low, a lower swing high, it's a good idea to take your stop and move it down and lock in some more profits. So I'm a huge believer in locking in those profits as that price kind of continues to move, but only where we've set in new swings, right? If I'm going long, I want to move it up below new swing lows. If I'm going short, I want to move it down below lower swing highs. Copper, yesterday we talked about how there was this triangle pattern that was kind of forming, although it wasn't an official triangle pattern. That was my fear and why we converted this to a dashed line, and then we popped up above it. So technically you can take the breakout trade if you were so inclined. But I was just looking at it more from as to a reasoning as to why to convert this to a dashed line trade. And then in nat gas, we have a little bit of sideways price action kind of happening through here. Could give you a good breakout long opportunity from that nat gas area. Great British Pound, we are coming close to our level down here. Keep an eye on this as we get there, though, based on the arrival. It could be like that euro trade that we had where you get a little bit of basing just before, which will make it for a very short profit potential from that zone. We're actually started to reverse. You know, I was looking at this was the breakout, right? This was the better opportunity on the breakout short right below this level here as it ran down. I don't know if we're going to get another shot at coming back up into here because we've come close to it and then it started to fall from there. So just keep an eye as we approach that level. So, you know, I think the number one thing to consider is patience and not to break your rules when looking at any of these trades. When I'm looking at my 4 major equity markets, the S&P, the Nasdaq, the one that I didn't talk about at all today, and I don't normally talk about it in the daily market commentary. We do it in the live trading rooms, is the Russell. And we took a short in the Russell on Sunday night, and it's been really, really moving very well for those people that were able to hop onto it. And we actually looked at it from a hedge perspective, taking the short in the IWM, using the put option as a hedge against any other long positions you may have. And the Russell's really been underperforming. Matter of fact, to the point where when I look at it on a weekly chart, we are close to setting a new swing low. Haven't quite gotten that swing low put in yet, but we're close to setting a new swing low here on that rut. So just keep an eye on it. We're seeing the weakness show up in the smaller cap market, and weakness in the smaller cap market. Now, that is directly in contrast to the Dow, which is back to its all-time highs. So what does that tell me? That tells me that the big money has a flight to safety. They're moving out of the more speculative plays and moving more into the flight to safety, the quality plays for protection and just keeping themselves kind of out of harm's way. So if we do get a breakout long, you could theoretically take a breakout long in the YM because there's no overhead resistance to stop us. So just something to consider. All right, everybody. Well, I hope you have an absolutely great trading day. If you have any questions, please send us an email, support@tradersarmy.com, and I will see you soon. Later.